Welcome everyone to the Kindle Report for Tuesday, March 17th, 2020. Folks, the insanity just continues, but before we get started, don't forget to click on the like button, subscribe to the channel, and please forward these videos when you see them if you like them. I really appreciate it. So we've got a lot to talk about again. We saw some insane amount of movement today. We saw the Dow Jones collapse 2,900 points. The S&P was down huge numbers. Everything was down between 11 and 12% if we go across all the indices. The reality is, as we have probably finished this leg down, I finally have found some calculations to figure out what the next sequences are about to look like. And there's a really good chance, like I said, that we have hit a bottom. I'll go through that in details in a few minutes. But let's talk about the Fed for a minute. You know, we saw this craziness that happened on Sunday where the Fed came in and lowered rates to zero. They did a $700 billion stimulus package. But the most important thing, and I'll hammer on this a little bit, is they dropped reserve requirements to zero. So just know that your bank has $0 behind your deposits. So the banking system, you could look at it two ways. It's even been liquefied to levels that it's never been before because there is no reserve requirements. The Fed said, hey, don't worry, we got your back. If you need money, you can go to the discount window and get money. And what you saw on Monday, you saw the Fed come in and offer $1 trillion. They did it in two tranches, but $1 trillion of repos. Now, they didn't get taken. I believe there was about 190 on the first tranche and only about 19 on the second, which is sort of a good sign because that means the banking system wasn't more illiquid than a lot of people thought it was. So that's a good thing. But nonetheless, the banking system is still at risk. And last night, I talked about some of the illiquidity and the broker-dealers, the custodians, banks. You're going to see some stability here, I think. We'll cover it in a minute. Futures are up about 3.5+% right now. So you're seeing a bit of a rebound after hours, especially after the crazy day that we had. And I'll go through it step by step, what I found out, and show you exactly what I figured out and what likely is going to be at least the next 3 sessions to 5, and the possibility of 5 to 8 sessions, what they're likely to look like. And there's also 40+% probability that today was the low of this particular sequence. Now there's more to follow, but this sequence is most likely done. There's one more level. I'll go through the details in a minute. I continue to focus on and talk to you about this massive dislocation of capital, and that's going to continue. So you have to understand something here. As we don't know where this thing ends, we don't know the damage that's being done to the economy, and I'm going to give you an analogy which I think is probably the best way to look at this. It's like being in a hurricane. All the windows are boarded up. There's plywood on all the windows, and we decided to stay home for the storm. We can't find out what the damage is until the storm's over. And possibly we could see the eye of the storm and it's going to pass, but there's another wave. And I talked about this last night, that there's going to be a series of shock waves. So every time you think it's okay, it's not going to be okay, because what's going to be revealed as we go down the road, we're just talking a few days here really in this carnage, and especially since the administration and the Fed made some drastic decisions, and this is across the planet, okay? I think these governments are making some really, really bad decisions on how they're handling this, and they're just kind of freaking everybody out. You know, the grocery stores are getting wiped out. You know the story, you see what's happening around. Never in America has this happened before where the hysteria is so high. But to the markets, it appears to me that we've seen the worst of this thing, and now we're going to set up at least a consolidation phase, some rebound, and I'm going to draw out all of the parameters. But we did see more lockdowns, more talk of potential bans on travel. Like Trump or not, He's been ahead of the curve. He made the early decision on the China flights. He made the early decision on European flights. He's been ahead of the curve a little bit. And the team that we have here, it appears, in the U.S. as far as the coronavirus team that they have is some of the top players on the planet. But there's not going to be a lot of talk. I think we're going to see some stability in the news and things slow down and maybe some sanity come back in the market. We're seeing the VIX pegged at around 82, which is ridiculous. Everything's basically got overdone today. So let's go ahead and dig into the technicals. For tonight, I've left on some of the indicators, some of the Fibonacci projections. There is no Fibonacci projections to the downside, but there is, the rangefinder is suggesting that the S&P could move back toward the 2432, maybe 2483 level. As crazy as things are, we could see a complete reversal like we did the other day of the action. But the PPMs, you can see over here on the far right, they have just collapsed. And there's a couple calculations. I'm going to draw these out so you can understand exactly what I'm talking about here. And this will make a lot of sense once I get through this. So let's talk about just market structure, and we'll talk about some of the numbers that are important to understand here. But after this high that we made here, we have so far 3 legs down. And I'm just drawing them in right now. And the interesting thing is there's almost a perfect relationship when looking at a typical Fibonacci sequence. The first leg down was 538 points, and then the rally back was moved back to the 3136 level, and then there were 3 possibilities for that next leg down. One would be that the leg down would be equal to the first leg of 538 points. The second would be a ratio of 1.382 times the length, and the third would be a ratio of 1.618. And just to unpack these numbers, what you're going to see is that the 1.382 number, if the second leg down was equal in length, the target would have been for a move to 25.98. We know that's no good because we've already exceeded that. But the 1.382 number is exactly 23.93. Today we hit 2380.94. So we went through it by a little bit. 1.618 length suggested to be 870 points to the downside. And that would put a target at the 2266 level. So that's still a possibility. That's still in the realms of possibilities here. But tomorrow will be critical. So if we can close higher tomorrow, we're likely to start a 3 to 5 day pattern. And most likely what we're seeing here, and this is going to tell us a lot about what's going to happen over not just the next 5 to 8 days, but potentially a much longer period, and whether we've established a low. If you folks flash back to 2018, we had this big move down. We only got a 3-leg sequence down, and then the market just did a V bottom, just went straight back up. I don't think that's going to be the case here. The circumstances are way different. We've got a backdrop where nobody knows what the economy is going to do, so there's most likely going to be some sort of flag to set up. Let me draw that in real quick. So we'll probably see some sort of flag set up in this range where we're going to get bars going back and forth in this range. Meanwhile, this 10-period moving average and all these averages are going to start coming down toward this pattern. If there's going to be a bottoming pattern, we're going to have several challenges over the next 3 to 4 weeks if we can stabilize this bottom. If the probabilities of going to that 2266 number right now are only about 30%. Tomorrow will be the key, though. A higher close. Some of the numbers that we're looking at possibility suggest, as I mentioned, we can go up to around mid-25 handle, maybe as high as 2605. But the upward targets are even more interesting here. In this pattern that I just have drawn out, is that 2635 to 2675 would be the top end of this pattern. Now, whether or not, my guess is it'll take 2 or 3 sessions. So it'll be lots of volatility like we've been seeing, and then we'll print up and we'll actually see a pretty good run. Now that from the lows would be 300 S&P points, and that would set up a pattern. And then the key test will be, after, if this does unfold, the next test will be how it acts on the downside. We should have a retest, retrace anywhere from 50 to 60% from wherever that top is back toward the lows. The pattern that's going to set up should unfold in this 3 to 5 day scenario. As far as some of the other markets go, I'm going to keep this really brief tonight. If there's any craziness that happens, I'll do a live show if necessary. But this is really the key market to watch. The gold market's out of play right now. There might be like a good buy down here, but I don't think so. I covered that pretty well in yesterday's video. Crude oil's up 1.3%. So I suspect also, just a quick comment, that we'll see interest rates uptick tomorrow. Everything will start to stabilize from what we've seen today. This will complete the broadcast for tonight. Thanks for watching. Have a safe day in the markets and be careful out there. It's not time to buy yet. So be patient. We'll talk to you tomorrow night.